Hello and welcome to another FX Centrum daily market analysis. For today, I will go through our cross asset list. So I will cover coffee market, WTI, US 100, US 30, USD Japanese yen, pound dollar, euro dollar, dollar index, Bitcoin, gold, and aluminium. I will start with the coffee market first, and of course, I will use our FX Centrum charting software. So let's start with the coffee market. And what we can see here is a clear breakout. This is something that I alerted yesterday about. So you can see here that after the breakout, this 208, 206 mark, and the middle Bollinger Band, there was a strong rally yesterday. And the market is basically yesterday's close was around 219.30 mark. So this is the area that I learned about, like a first upside objective in case the upside continuation. As you can see on the hourly time frame, there was a nice pullback bull flag on the hourly time frame that we spotted yesterday, and a nice upside continuation after that. So at this point, market is in the upper Bollinger Band, going alongside the upper Bollinger Band on the hourly time frame, and we are in an interesting level because the previous swing low was around 222 mark. This swing low at this point here around mid-April. So if the market will continue with this upside momentum, then the next upside objective is set at 230 mark, which is this previous swing high, and also its area around the upper Bollinger Band or the 2 standard deviations of the 20-day moving average. In terms of stochastic, we can see that slow line is a nice slope to the upside from the oversold area. Fast line is sloping to the upside, and we have a new monthly new high in the rate of change. So rate of change went all the way up to 6 mark. So this is a quite big move in the rate of change. Something similar we had in the beginning of April this year when the rate of change was around 7, and you can see what happened after that. And the breakout upper Bollinger Band was there was a very good upside movement. Will this be something similar? It's too early to say because we're still within the Bollinger Bands, but obviously the buyers are in control and the hourly is trading pretty powerful at this point. So of course there is a chance always for market to rotate, have a consolidation day, but so far we don't have any signs for the downside reversal. So I keep an eye on for the upside opportunities. On the WTI, we can see that there was a rejection. This is something that we have also learned about yesterday. There was a gap between the fast and slow line. We had a test and reject of the 80.11 mark, quite important resistance. This is the top of this consolidation. And you can see here that sellers are in control at this point, and you can see how narrow is how narrow a Bollinger Band. So we have really narrow range. So if we can see the breakout of, let's see, 76.70 mark, which will be also the pin bar low from a couple of days ago, this can be quite a big confirmation of the daily time frame for the drop even towards 72 mark, if not even 69 mark. Now the spread between the fast and slow line is decreasing at this point, but still there is a chance for the market to get in the fast line to get closer to the slow line. So on the hourly time frame, you can see sellers in control. We did spot this rising wedge in the breakout and the retest. So far, sellers in control, and the WTI is progressing well to the downside. Now, US 100. Let's start from a daily time frame. Still, there is a big rate of change divergence there in the last 5 to 6 days. The market made a higher high, also made a lower high. That's a classical bearish divergence. You see stochastic is trading around the 90 and 100 mark. So this is quite a, I will say, extended environment based on stochastic. So market's pretty much extended without a single corrective day even in the last 20 days. So there was like some narrow down days, but we didn't have a significant down day or a couple of down days. So there is still chance from my perspective. But for that, in order for that potential downside movement to happen in next period, I would like to see the confirmation of the intraday frames. So far, there was an attempt from sellers to break, but it was absorbed, and market traded higher into the new high ground. But at this point, after the market trading to the new high ground. We can see the market is doing sideways, and now it's trying to go to the lower, let's say. So if the market can again trade and break, let's say, below lower Bollinger Band at 18,640 mark, or even if market can clear 18,600 mark and hold below, that will be the change from my perspective on intraframe that can lead to this daily kind of correction or the bigger downside correction, at least correction on the US 100. Rate of change as alerted is already, we can see the big divergence. US 30 is a weaker symbol and weaker index. We had a down break, we had a pause, and we can see that seems like market is breaking now to the downside. So you can see here that this is more like a bearish flag, just type of correction. And if the market can really break lower Bollinger Band and let's say 39,800, if the market can break this and hold below, this can be quite a good continuational move on the hourly, which will then mean that the market can eventually go towards middle Bollinger Band on the daily time frame, which is set at around, let's say, 39,300 mark. So I see this potential. I can see that there was a fresh bear cross on the stochastic from the extended environment, and now the fast line is sloping to the downside, and even the slow line, we see the start of the downside environment. So still, I see that quite a very possible scenario in the next period. On the USD Japanese yen, market is just around that swing high resistance at 156.74. See the fast and slow line, they're sloping to the upside. We can see there is in the gap between the fast and slow line, but still the fast line is sloping to the upside pretty aggressive. If let's go to the hourly time frame, we can still see that this hourly lower Bollinger Band is holding very well. There was a 10th here, but it was absorption just very next couple of candles. So this is a sign of strength, and I see potential for the rally and eventual retest of 157.70. Then we have a 158.20, and then pin bar high all the way at 160.20 mark. The pound dollar, you can see today the market actually, there was a retest of the upper Bollinger Band. We can also see that market and volatility is expanding, but now the position of the fast and slow line of stochastic is pretty much extended. The slow line is trading above the 80 mark, fast line around 90, but there is some kind of, seems like the gap is trying to decrease at this point. The fast line is trying to decrease the gap. Now let's take a look at the hourly time frame. There was just a single candle. So single, like it can be quite a climatic move. So this can, if we absorb this, so if we see the absorption of this can be, and this is because of the CPI this morning, CPI year on year, so the consumer price index, we have a report of 2.3% versus forecasted 2.1%, and this was immediate reaction based on that event in this first hour. But if we see the absorption of this, if the market can trade below 1.2706, this can be quite a big downside sign. And then this can open the door for this downside movement even towards 1.2645 or even 1.2595 mark. So quite extended. It's trading in the upper Bollinger Band, so it's trading around 2 standard deviations on the daily time frame. The position of stochastic is also extended, and we can see that the market is the fast line is trying to decrease the spread between this between the fast and slow line. So if we see the absorption of this climatic candle after the CPI in the UK, we can definitely have a good odds for the downside movement here. Anyway, the alternative scenario the market can keep with this, and with this upside and buying pressure, and the next upside objective will be around 1.2800, just in case the market can keep and build more buying power through the day. Now, euro dollar, We didn't have event for the euro this morning. We had a CPI in the UK, but here we can see that market is actually, we had a fresh bear cross a couple of days ago. So there was a fresh bear cross in the stochastic. The fast line went all the way to 90 plus, and then there was this sell cross. And we can see the market is trading in this tight consolidation. So if the market can clear 1.0, let's say 835, and hold below, then there is a chance for a drop towards 1.07, let's say 1.0800 mark, and then the next one is 1.0740. So watching for the breakout of this consolidation. In case of the upside breakout of the 1.0885 or 1.0900, next upside reference point is set at 1.0940 mark. Now we have dollar index. As I learned about, there was a gap between the fast and slow line. Now we decreased that gap between the fast and slow line and stochastic. We are in the mini consolidation, so the eventual break of 104.73 and hold above can be a good sign for the rally towards 105.13 or even 105.50 mark. What I like here is that as soon as we had a break of the downside break of the lower Bollinger Band, there was a reaction from buyers. That's basically a good sign, and especially this level around 104 is quite a key support for the dollar index. And as long as the support is holding, I give more chances for the higher price. Next market is Bitcoin. So market is just around this crucial resistance around 73,000 mark. But what happened here is we had quite a climatic candle here, like 2 trading days ago. There was a close above the upper Bollinger Band, so we are pretty much extended in both in standard deviation terms and in the stochastic terms, because the fast and slow line are trading above the 80 mark. It's quite extended from both perspectives. And after this big up day, there was no follow through. Actually, there was a down day back into the Bollinger Band. And that's quite a big red flag for the further upside continuation. And this can be the beginning of the downside rotation. What I like here too on the hourly time frame is how we're developing. There was a down break of the lower Bollinger Band, as you can see here, and the natural pullback, natural reaction, and then there was a resell at this point that is happening. So from my perspective, if the market can re-break 69,000 mark, there is a good chance for the market to rotate all the way back down to the 66,000 mark. So good potential if the market can re-break this lower Bollinger Band for the market to actually go downside, and this will mean that the daily will correct towards the middle Bollinger Band and this previous demand zone, right? So there is a chance for that. Gold market. So let's take a look at the gold market. This was a sell idea, so I gave the sell idea this actually yesterday, and so far market is progressing relatively well. The protected stop was 24.38. Market didn't take that, and now it's trading around 24.17. Still, there is a chance for the gold, especially if the market can re-break 24.06 level. If the market can re-break that and hold below, there will be a chance for a bigger drop, maybe even towards 23.50 mark. But we have like 23.75 and 23.50 mark, like then like a downside objectives. On a daily time frame, we can see same thing. There is a fresh bear cross on stochastic around overbought or extended environment, and there was a rejection of this all-time high. So there is a chance for that pullback, at least pull back towards the middle Bollinger Band on a daily time frame. And what a move in aluminum. So aluminum, there was a just upside continuation yesterday. So market broke. We had a breakout of the upper Bollinger Band. You can see now market actually is reacting downside. So we will see if this breakout can sustain, but this can simply be still a pullback towards the middle Bollinger Band on the hourly. So far buyers are in control, and we spotted pretty nicely this consolidation break at this point around this 25.71 or so. And this was a nice push higher. But the problem with this one is pretty extended, especially the fast line extended pretty fast. So like went to the 90 mark. So there is a chance for this pullback and rotation back down, at least for the fast line to try to correct and get closer to the slow line. So this is a pretty extended environment. So we'd like to see more like maybe a day or consolidation, or a day or a couple of days pullback slash consolidation, and then to watch for eventual upside continuation. Okay, guys, so that will be all for this daily FX Centrum market analysis. If you didn't visit our website, you can do that. So fxcentrum.com, FXCTV, you can explore. You can see our views every day on most liquid markets, different trading ideas for the week, tutorials. You can get access on our webinar, FX Centrum. All you need is to put your full name, country, phone, and email, and you will be able to watch our video. And of course, you can open an account in just a couple of clicks. You can try our demo, like $10,000 demo account, or create an live account in just a couple of minutes, and then you will be able to use our FX Centrum platform. So that will be all for this FX Centrum daily market analysis. Have a good trading day and speak to you soon.